Hello students, in continuation of our chapter 3 Goodwill, we are going to today understand the classification of goodwill. Okay, before that, let me just briefly recall what we did in the previous class. We did the meaning of goodwill, which was easy to describe but difficult to define. We can understand goodwill by good name, reputation, links, okay, style of working, revenue generated, profit, how much growth prospects are there, what is the salary structure of employee, etc. Other factors are also like how many years of establishment is there of business, what is the location of business, whether it is centrally located or it's far off from the marketplace or the locality. Okay, all this are the factors on the basis of which goodwill is decided. Now, in today's class, we are going to understand the classification. There are two categories: purchase goodwill and self-generated goodwill. We all know purchase means some consideration must have been paid, and self-generated states that it must have been stated internally, or it must have been raised internally without any consideration given. Okay, so now let us explain and understand in detail. Purchase goodwill. It arises when purchase is made by another firm. Okay, when is purchase goodwill come into existence? When another firm purchases the existing firm or business and pays something, which is something should be in excess of the value of net assets. What are net assets? Then all of you know class 11 concept. Net assets are assets minus liability. Correct? So, what is purchase goodwill? It is the excess amount paid over the value of net assets by the purchasing firm to the selling firm. Correct? This is purchased goodwill. Now, suppose if I say AB Limited has purchased XYZ Limited and it has paid 40 lakhs. Correct? When the valuation of net asset is done, then it has found out that net assets are assets minus liability value 35 lakhs. But how much it has paid? 40 lakhs. So what is the difference? 5 lakhs. 40 lakhs minus 35 lakhs. What is the difference? 5 lakhs. 5 lakhs is the amount of goodwill which AB Limited paid to XYZ Limited at the time of purchase. Okay. Now features. It arises on acquisition of existing business. Acquisition means purchase. Existing business means which is running business, and the owner of the business wants to sell and the purchasing party is paying something. Okay. Then it is recorded in books of account. Always remember purchase goodwill because a transaction has occurred where purchaser and seller are there in the transaction. Okay, so it is recorded in books of account because it is of financial nature. In balance sheet, it is treated as asset, and we all know that it is an intangible asset and not fictitious asset because it can be paid because the price is paid for its purchase by the purchasing party. Now it is determined on the basis of future profit. When the purchaser will pay, then it will be taken into consideration what will be the future profits that will be maintained. Like that only amount will not be decided. So the word was used when I explained to you in the previous class that valuation is done on the basis of subjective decision made by both the parties, purchaser and seller. Correct? Now, AS 26, AS means Accounting Standard 26, states that goodwill should be written off during its useful life. It is always clearly stated, Accounting Standards 26 state that goodwill has to be amortized within its useful life. Now this is regarding purchase goodwill. So you have to remember it is shown in balance sheet as asset. It is recorded because it is in financial nature correct, and it has to be written off during its useful life. Now what is second? Self-generated goodwill. This is not recorded in books of account. Okay, it is not recognized as asset by accounting standard 26 because it is internally generated, and there are three other names. See, first name is self-generated, then it is also known as inherent goodwill, non-purchase goodwill, or raised goodwill. Okay, so I hope today's class you understood purchase and self-generated. Self-generated is not regarded as asset, it is not recorded in books of account, and purchased goodwill is written, and valuation is based on subjective judgment of both buyer and seller. So I hope it is clear. Thank you.